Good morning, good morning, good morning. We are jumping in. Thank you very much. My name is Malachi, and we are trading options live. We're going to jump right in and see where the market is today and what's going on. So, we had, I believe it was PPI reports that came out today, and that's caused bonds to go up. We're getting a little bit of increase there in the bond price. That number is live and nice tight spread. This is set to close, sold it at 15 42 days ago. And for those that don't know, those are in 64ths of a thousand. So if you don't know, it should be about $15.62 or 63 cents. I can remember. But if you don't know, all you got to do is take 1,000 and divide by 64, 1562 and a half, right? So I sold that for 15. So I sold that for $243, and I'm set to buy it back at 7. So about half of that, just over half of that. So $117 profit is, and I would expect this to close today. We're right at my number. And the buying power, so I've got 3 positions open. So the approximate buying power is going to be 1/3 of that. So about $3,000, call it 30. So what did I say? That was 8 times 15.625, $125 profit divided by, call it 30. So 4% profit if it closes today in 42 days. So it's a little bit low on that because we carried that longer than I would have expected. However, I also did trade the call side of that under the same buying power requirement. It's already closed for profit. So if you remember that, the call side, when this drop down closed, I expect that to close today. So no big deal on that. So I will also say that I watch someone else, I watch other people all the time on YouTube. And one of the people I liked has his new stream. And what he said was, hey, this is my account. And I am showing you everything, the good, the bad, the ugly, the wins and the losses. And I thought that was important, and that I reiterate that I win and I lose on this. Overall, I'm up for the year. If we go back and look at the year to date, so I started at about 100,000. I did take out $10,000 in here. I took out 10,000 in January for the purpose of expenses. I live on this money, pays my bills. And then I went long when silver dropped below $100 from 120. I thought it was going to continue to pump, and I took a futures position, some large ones, and I was wrong. And I went all the way down here to $57,000 in February, and was forced to close some of those positions to protect the account. And I took a loss. And I say this because I had then went back to basics and said, okay, I know how to make money at this. Don't play the futures game and get back in it. Now, silver rebounded some. I didn't close all the positions, just some. I then closed those silver positions, and I went back to trading options the way I know it. And, lo and behold, if I just gone from the low point, if I filtered this and just went for the low point, I'd say, hey, I went from $57,000 to 105 in, I doubled my money in 6 months. Well, that's not really the case. Okay. I started the year at 100 grand. We were up a little bit as the market righted the first couple weeks of the market. I took a withdrawal down from 106 to 96. There's my 10K withdrawal right there. And there's my loss in the futures market. So you'll notice I don't have any futures positions on. I needed to remind myself I don't trade futures. I'm trading options. Why do I trade options is because I don't necessarily have to be directionally specific. And, you know, I could take the hit. I ran it out. I made the money back. I shall survive. But this was the point of this, is to show the good and the bad. So you're seeing my live account. You're seeing what I'm making. You're seeing all the trades that I have on and how I manage them, wins and losses. And hopefully we learn from it. So one of the other things that someone had said to me, one of my friends, was, you know, I'm jumping in the middle and I don't understand what you're saying or doing. I don't comprehend. I need to go back to the basics. I get that. So I was starting some videos, and there are some videos. What is an option? Who am I? I'm going to work on some of those videos this year on the basics. And here's the thing. If you look up here at the options here, they've got a whole list of different options that you can trade. And you can go reversed, normal, short, long, put, call, options, covered options, vertical, calendar, butterfly, ratio spread, strangle, straddle. Do I understand all of these? To the most part, yes. They use some terms that they've created. And then there's the advanced section, right? Here where we go, okay, a ratio spread or a strangle. This is nice because it shows you what it is. You sell a put, you sell a call. A straddle, you sell a put and a call at the same price, right? You're looking for it to stay in that range. Or you can go, you know, a long straddle. You can buy a put and call and look for it to move outside of that price. Big move in, say, an earnings play, right? So there's a lot of different things, but I stick to what they're going to call a vertical or a short put. This is my bread and butter. I sell the put, I buy back the put cheaper, right? Lower, and I limit my risk, and I potential is upside move. So that's what I do in general. That's what I'm looking for in my trades. And I'm sticking to the basics. And instead of trying to trade 20 different things, I trade basically, I sell puts and I sell calls in a wheel style. This looks like, did it lose? It's okay. Market's open. There we go. Market's open. We're off and running. And so the question then becomes, do I try and do 10 different things, or do I really stick to what I know and what works? And while I will use certain chances to move into other items for sure, I'm going to stick with what I know. And then once in a while, I'm going to go out and go past that. What I know is I like my coffee. I'm going to drink my coffee and I'm going to trade this morning. So I'm going to run through. If you guys are in here, welcome in. Do me a favor. Let me know if you have any questions. But we're going to run through this real quick. My goal, in and out of the market in about 20 minutes. Do I do other things? I watch pre-market analysis while I drink my coffee in the morning, and then I go and do other things during the day. I used to sit in front of the computer and just bam, 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 try and trade all day and keep scalping and keep making money. And my new rule is don't overtrade. Get back to basics. Thank you very much. Good morning, Brent. Thank you very much. Yeah, let's make some money. We're up $400 today. A little bit of push up on the PPI report, but let's see. We've got the bonds set to close there, so no action. That's right about where we need them to be on this a 7-8. So I'm right there. Going out to the September options, that's set to close at 12. We're at 13, give or take. That's real close. This one is set to close at 9, so we still have some ways to go on that 105. All of that looks good. AMD trade, took this trade yesterday. It's just grinding along. That's out till September, so no issues there. Amazon, so this is for, and I'm going to do a little bit more teaching today just because of terms. So this would be a wheel. I own the shares. I sold a put. This trade price is because I clicked the wrong button on something, but it was still a put where I took assignment on the put at 57. I don't know why it ended up. I screwed something up, but So on a wheel, the two main strategies I run are going to be verticals and wheels. A few diagonals, which could be a poor man's covered call or just a 1 month sell, sell or buy the close month and then the opposite on the far month for a little bit more leniency. But in general, I'm selling verticals on the same date or I'm going to sell a wheel. So in this case for Amazon, if I were to say, okay, I want to wheel this, I would look for the right number right in here around the 16 delta. I would sell a put at 245. I'm not going to do it. I'm already holding 100 shares. That buying power, so for 6 weeks, that buying power for it would be 3,122. Oh, my Robinhood trade closed. So the buying power would be 3,122. I would collect $2.17 in premium for about a 6%. So that's right in my range. And then I'm either going to roll and defend or allow assignment. If I allow assignment, then I turn around. I would be assigned at 245 and I turn around and sell covered calls. Again, I would be holding. So let's say I'm holding Amazon. And what you're going to see here is that in this case, holding the Amazon requires more market cap. The cap required is higher than holding the put out of the money, about twice as much. So theoretically, I'd be better off just rolling that put out as opposed to trying to wheel it. But this allows me to, while this market cap is here, it also allows me to, it adds to my margin and it's lower risk. So in this case, I'm holding Amazon and then I turn around and sell the covered calls on it. So let's say September rolls around, Amazon's at 245, or let's say I signed at today's price, 270. I turn around and sell a 6 week out put on Amazon. Now it's taking $7,000 of buying power, but let's say I got assigned at 267. I sell the 270 put 6 to 7 weeks out for 910. Now this buying power is going to be wrong because I've got other trades on. Let's call it $7,000 in buying power, but I would make $910 for selling $7,000 for using up $7,000 of buying power or 13% in 6 weeks. What's the risk on that? The risk on that is that the shares go down and don't recover. And if the shares go down, then you might get stuck in it for a while and holding that trade. That's the risk. That's the way it works. So that's why I'm selling this covered call and I can just let it expire. I'm never losing on this trade unless this just goes down and stays down. All right, so a little bit of teaching out. That's the wheel strategy. Sell the put, take assignment, sell the call. I do it some, but mostly I do vertical spreads. Put verticals, and I do them for a credit. So I sell the spread as opposed to buying it. In general, I want to sell the premium. I want time on my side. Google, another one that I wheeled, it's down. And here's where I'm taking a loss on the shares. My profit and loss is open on the shares is I'm down 2,500, but I'm going to continue to sell the premium on this until Google recovers because I do think Google can recover, right? So right here, selling that, I'm short Google. It's taking up $800 or $8,600 in buying power. And then I'm going to sell the call. I'm down. That's fine. And then what I can do is, as this goes, we've got 36 days, so I wouldn't do it right now. But what I will do when it gets to 21 days is I will buy it back. Say I were to buy it back for 460, and then I just roll it out to the next month. Roll it out to the mid-month, the third Friday, the true expiration, monthly expiration, at the same price. So 370, run it right back out to 370, sell it, and I pick up another $400 on that month on $7,000 of buying power. So basically, I'm picking up, that's $8,000. So I'm picking up about $400 a month on $8,600. I'm picking up about 4% a month on that. So that's how I handle those trades. QQQ. QQQ is my general go-to. The profits in QQQ tend to be a little bit better than the profits in the S&P or in SPY. a little bit more volatility. So let's take a look. QQQ is shooting up today. We're at 728. I really was kind of talking and missed my trade on that. We're going to come back and see if it pulls back a little bit. And I tend to be bullish on that market. The reason I'm bullish on QQQ in general is because money tends to flow in. Poorly performing stocks are going to be kicked out. New performers are going to be brought in. SLV, silver pulling back a little bit today. That's okay. I hold the 100 shares. This is just another one I'm wheeling. I end up getting an assignment at $70 and I'll just sell it. Not that great, but if you see the market cap on that is only 1,400. SpaceX, I got assigned at 145. I bought shares at 121 and change, average of 133. I want to roll this one out today from 130, and let's take a look at that, at how that's going to look. So it's upside down, so I want to defend it. That's the 140. That's not the one I'm looking for. All right, so I'm going to close this. I'm going to buy this back for 1820, and I'm going to roll this out to the September 18th at the same price, 130, because I want to collect a credit. I really would like to go to 135. I wonder if I could go to... That says I might be able to get a $40 credit and pick up the $5. Let's just see if that goes through. We'll give that one a chance to run through and see if it fills today. If SpaceX pulls back, we'll see if it fills. On the August 28th one, oh, that's the one I just did. Never mind. Clicking the wrong buttons. Going to the 18th and selling that at the 135 for... All right, let's try a $15 credit. There we go. We filled. Filled at a $34 credit, it looks like. So, yep. So we put it at 15, filled at 34. So we pick up $34, plus we pick up $500 in intrinsic value, and we carry that out to September. So if it stays above 135, we're going to pick up more premium. And I'm going to set that in case it, well, let's see. That should just follow my rules, right? Set that to close. If it drops down. So basically, I could theoretically, if SpaceX drops down, I could pick up another 1,700 in value on this. But I'm just going to set that to close at 50 cents. Just in case it plummets and then bounces back up or something weird happens, I will just close that out. All right, next one. Next SpaceX position. We're in the money, but not by much for the 21st. So let's look at this 21st position. I want to buy that back for 940. So cancel my current open order. Buy that back for 940. And I want to roll that out 1 week to the same strike price of 140 if I can. For $1.85 is the mid-range right there. So what I'm going to do is I'm just rolling it out, same strike price, same date, picking up about $200 in premium. And let's just kind of creep this down a little bit and see if we can't get filled on that. There we go. Got filled at 193. So all I'm doing is holding those shares for another 7 days. So 1 more week from where I was. I pick up $200. And the cost to hold those SpaceX shares, since I'm holding 200 shares, is $15,440. So $15,440 divided by 2 for the 100 shares, $77.20. And I just sold that for what? 193 divided by 77.20. 2.5% for the week. That's what I'm picking up on that one right there. That's my $200 for the day on that, because I will let it expire and get called away. I'm okay with that. Look at our SPY trade. We've got nothing on the SPY trade out till September. And our last thing, let's just look at QQQ. IV ranks pretty high. Again, this is my bread and butter. 7 days out, looking for somewhere between the 16 and 10 delta. We pumped up today. We're pretty high. I'm going to look maybe a little lower at the 10 delta. Sell the 705. Buy back the 665. So this is a put credit spread or a vertical spread. 4,000 wide. I'm going a little bit lower, a little bit further out of the money, playing it safe because we're jumped up today. And I just made $200 on the SpaceX, which is my target. And let's see if this makes sense. If it makes us 1% or a 0.5% for the week, we're kind of close. So 87 divided by 30, we'll call it 4,000 because it's 4,000 wide. 2%. I'm going to set this to close at 40 cents. So we're truly going to be making $47. I mean, if we minus the fees, $45 divided by 4,000, still making our percent for the week. And there's my trade. And we automatically immediately put in our order to close it. Why? Because I don't want to sit here at 45. What did I say? 45 cents. We'll call it 45 cents. No, we'll call it 40 cents. I think that's what I said. So a little bit lower profit on the QQQ trade, a little bit further out on the 10 delta, still 40 wide, and then made money rolling the SpaceX out. And hopefully these will close. I still have plenty of buying power available. Still have 37,819 in buying power on options. Double that for stocks as a margin account. So that's the way in this margin account that I trade this. If you've got any questions, feel free to jump in. We are in and out of the market in 15 minutes this morning, so it's right at my time frame. And that's about it. Oh, what just closed? Oh, there we go. That just closed. And let me read this. Okay, so on the put, Brent's question, on the put credit spread, defined risk, 1,000, 2,000, 4,000. Do you track the total risk of all of your opening trades as a way of monitoring, managing your risk? Do you aim to keep a certain amount of buying power available? So yes and no. I look at the risk reward, and 4,000 seems to be a sweet spot for me. Sometimes I'll do 1,000 or 2,000 on other underlying assets. I will change that. So let's take what's a good, okay, Robinhood. Robinhood's a good example, and that trade closed today. Robinhood is up almost 5%. So not going to be a trade I'm going to take today, but going 4,000 wide on Robinhood may not be worth it. So what I would look at is, okay, where's my 10 delta? $80. 4,000 wide would be 40. I'd pick up $97 at 4,000 wide. So I'd be picking up, for 6 weeks, I'd be picking up $900. And the buying power effective on this, because it's a smaller stock, I'm assuming, as opposed to being 4,000 wide, I'm still $40 wide on it, but it's only $800. So I have a target of 10%. However, what I might do on this, and look at this, so there's really no market to close that. So what I probably, on Robinhood, what I tend to do is I'm going to go about 10 wide, right? Now, what you'll see is 10 wide. Let's see, did it adjust it? Let me just clear that trade out and make sure it, sell the 80, buy the 70, 10 wide, 83, 829. It almost didn't change. It changed almost nothing in my buying power, nor did it change in my max profit. The only thing it changed is my max loss. Max loss here, 9,000. If I roll this down to the 40, max loss is 3,800. So while the buying power is still 800, my max loss, I'm increasing my risk and I'm not increasing my reward. So that's where I jump in on defined risk. Is going to be more about risk reward and depth of the market. Another one, oh, here's a trade. IWM. So IWM is the iShares ETF that trades the Russell 2000. It's up. So IWM trades smaller. It's trading at 303. But what you'll see here, if we go out 7 days, is that there's really not much depth of market when you get $30 or $40 out of the money. Not like QQQ. It moves a lot slower. Its expected move is only $3 or $4. This again, I would trade at the 16 delta. I'm waiting for a little bit of a pullback as the market shoots up today like crazy. So maybe I'm wrong on that. But this is a trade that I will make. I would trade this if I were trading this today, which I'm not. I would trade like the 298 and I'd go 10 wide to 88. Again, $1,000 risk, picking up $42. So, and buying power effective is the $1,000, but it's 4% in a week, right? So that's it just depends on the underlying asset on which one I do. Now, buying power. Yes, I do like to leave buying power in. If I get down under 20,000 in this account, I really start to watch it. And part of that is in the naked options that I trade, and that's going to be the naked puts in general, which I don't have a ton of them on. These naked puts, as the market moves, they can cause me more buying power. The cap required can go up, right? So because it moves closer, that's why I moved to defined risk. But say I wanted to trade an AMD naked, go out to September. Instead of doing the defined risk, I just picked this trade here. As it moves closer, that's $5,700 of buying power. But if AMD drops, say $40, all we do, move this $40 closer. And what you'll notice is the buying power goes up dramatically from 5,000 to 9,200. What happens is that's going to lock up my buying power here. And so if the market moved dramatically against my position, I quickly lose my buying power. And I don't want that. That's why I do defined risk. You trade $1 million account, that's fine. And one of the things I could do, Tastytrade doesn't pay you interest on this money. So one of the things you can do if you want is stick that into something like SGov, right? Which is just an ETF that pays a dividend, and yet it doesn't tie up your buying power. I wouldn't do options on SGov. They're almost worthless. But if you look at the SGov chart, what you'll notice is SGov, excuse me, let's go to a 1-day chart here. SGov goes up all month, reaches its point, it pays its dividend, goes to $100, goes to $100.67, give or take, earns its money, it pays its monthly dividend, drops back down, and goes right back up. So it's very stable, and it's going to pay you a dividend every month to hold your money there, but it's always available if you need it, because, so right now it's paying about 3.59%, right? But it's always available if the market moves so that you can kick that out and open up liquidity. So if I had $100,000 sitting and I wanted it to still be somewhat productive but leave the liquidity, you could go into something like BIL or SGov. That's a pretty stable fund that pays very low dividends. But I leave it open. It's not to make an extra 3% on this 4,000. Okay, it's $1,500, $1,200 a year. Yes, it's just for me. I just leave it there. If it was a couple 100,000, I was leaving open and buying power. Yeah, I'll throw it into something like SGov. Or if you want something that pays dividends and just want to trade on the margin, I put it in something like QQQI that pays a little higher dividend rate. So that's what I do. That's how I manage it. On this is just my experience and knowing my numbers and then knowing what positions I have open that are either naked or defined risk. I also like to leave buying power because as the market is just screaming up today, I like to I like to wait for the pullbacks. And when the market pulls back down into this range, right here, or if I'm looking at that, when the market's dropping down, this spot it's dropping down, this spot it's dropping down, go back. This is a great entry point. You have a dip and then another dip here, right? And I don't do a whole lot of charting, but this is where I'm looking at stuff. Okay, I have extra money in my account on those dips, and I can either do what I call a buy right. I don't know if they have a name for it here, but one of the other options that I could literally do on a day where I want to trade something different. Let's just show this trade. So I could buy 100 shares of QQQ on margin. This is a higher risk move, not necessarily recommending it. I like it in a big dip market though. Say I buy 100 shares. It's going to take up buying power. And then I immediately turn around and write a 0-day option on those shares and make money. Now this might not be it, but basically I could, for one day, I could spend $73,000. Now, how much let me just see what it would be here. So 100 shares, if I were to buy it right now, would take up 36,500 in buying power. And then I trade the option on it and sell that at the money, say for 144. I make 1/3%, almost 0.4% in 8 hours. And then the idea is that it's going to close and just let those shares go. And I sell them for 31. So theoretically, if it did that, I pick up, there's another one closing. Say I bought this right now at 730.60, sell the 731 call and it ends over 731. I make $1.44 plus the 40 cents. I make $1.84 times 100 shares and then divide that by the 36,500 in buying power. I end up making 0.5% in a day on that trade. And the risk on that trade is that it drops. I still get to keep if it drops that 166 or whatever I sold that for, but I still hold the shares. So I've got a risk of that dropping and not getting back into it. So that's another move that I'll have. And a lot of times what I'll do is I'll buy it today and I'll sell it for tomorrow at the 731, say. And in that case, I would pick up about $350. What was the price on that? Say $340 plus the difference in the price of the shares. Divide that by the same 300 and 36,500. That's not right. About 350 divided by 36,500 is just under 1% for 2 days. So that's the other move that I'll have in there, but I like to leave some buying power in the back in case the market pulls back to get into those positions. So Brent, I hope that answers your question. Thank you very much for all of the great questions. And that now we went a little bit over my time plan, but it was a little bit of teaching in there. So once again, we were in and out of the market in 15 minutes, done for the day, and then looked at some other options on what we can do. But I do tend to stick to some very basic moves, right? My basic move, the put credit spread, sell the put, sell the call. Wheel. Sometimes I do the buy right, which I think is the term they use on Schwab. I don't know if it's really hard to get that to go through as one trade, which Schwab actually had it built in as one trade. But that's where I'm at with that. And if you have any questions, obviously feel free to jump into the chat and drop them in there. And thank you very much. Do me a favor, if you like what you see, do click the like and the subscribe. Help me with the algorithm. I don't actually make any money on this. I do this for fun. But if we ever get to the point where I can make some money, that would even be better. I will see you guys tomorrow.